Good morning, everyone. We have to use the microphone because the session is being recorded. Otherwise, I think you'd be able to hear us just fine. My name's Ivan. I work for a business called Nattergal, which is a nature restoration business in the UK where we sell ecosystem services focused on biodiversity first rather than carbon. And so that's really the theme of what we're talking about today is beyond carbon. Over the last few days, we've heard a lot about mechanisms and MRV and carbon and systems and policy, but we haven't, I've found, heard very much about who's going to be buying that carbon, the demand side, and what about biodiversity, and what about community, what about people associated with all this amazing carbon farming we're talking about. So the panel today will be looking at these co-benefits or core benefits, depending on your perspective. So what we're going to do is each of the panel, all these nice people here, we're going to do a 5 to 10 minute presentation each, so you can understand where we're coming from, what our perspective is, and then we're going to have a session for questions at the end, and obviously we'd love to hear from you. So any questions from your side, please, at the end we can go through them. We've got some as well to stimulate the conversation, so we won't be up here saying nothing, but it would be great to hear some questions from all of you. And so I guess just for the benefit of the recording, when you guys do your session, just introduce yourself first briefly so everyone knows who you are. I think Romain is going to start. You can use this if you prefer. That mic is on, I think.
Hello, hello. It works. So, hi everyone, for the brave who are still there on Thursday morning. I'm Romain Boulet and I'm lead science and technology at Sol Capital. Our main focus was carbon because there is a market, there are a lot of methodology existing around carbon, and it was one entry point into regenerative agriculture and resilience of our ag-food system at first. But of course, resilience is not just carbon, it's far larger than that. So that's why I will present a bit our approach for Beyond Carbon in a few minutes, and then I hope we will have an interesting open discussion together. So what I will talk about is, I know, and as you said, there are not a lot of buyers at the Carbon Farming Summit, but how we can deliver beyond carbon indicators and data for corporates. So what we do at Sol Capital, but I think with all the data we are gathering for carbon, many of us can do. We've created a Beyond Carbon calculator to just be able to make sure that farmers making effort on the field can bring value to the corporates who are buying their products. And so how we do that, we do not want to bring more administrative work to farmers because collecting data for GHG assessments and carbon removals is already a lot for farmers. So we try to see how with those data needed to run process-based model, for example, for carbon assessment, how can we deliver other indicators that help farmers going further in their transition, better understanding the resilience of their system and how they can improve. And so we use those data from the carbon assessment. We enrich them with open data and science. Then we put some contextualization based on where the farmer is, what is his system, etc. And then we aggregate all this information into one RegGenAct score with different components. And then we are making sure that the corporate at the end understand how resilient his farmer and his value chain can be with program like this. And so we'll not go into too much detail, but we can discuss after. Basically, with all the data and open data we are using, we've built 32 indicators gathered in 5 main domains. So the first one is obviously climate, and that's what we discussed the last 2 days, carbon. But we opened that to have also water management indicators, soil health, biodiversity, and socioeconomics. And everything is then put in one RegGenAct score for the farmer. And how it looks like, and after that I will give the floor to my colleagues, but how it looks like for a farmer. So a quick example I think that is very important to remind also to the EU Commission is that, yeah, the GHG footprint is interesting, but it's only one way to look at the problem we have in front of us. And so you could have 2 farmers, 2 neighbors having exactly the same GHG footprint, but when you look deeper at other indicators, water management, soil disturbance, etc., you can have 2 very different systems. And having the farmer beneath being far more resilient and far more advanced in his transition than the farmer above. And so that's why it's really important to be much more open-minded than carbon, because RegGenAct is a holistic topic and not just one indicator. And so a farmer can see on all the indicators and on all domains where he can improve, and we can, anybody on the field, not Soul Capital, can help him, advise him how to improve on those indicators. And for corporate, we can gather multiple farms of the value chain and give a report, a dashboard every year to show, okay, how the value chain is evolving, what are the critical points, and there is no one story. So maybe you will have a corporate saying, okay, I want to focus on water management, and so I want you to help the farmers improving on that score, and other will focus on soil health, other on socioeconomics. So it just, the goal of those type of calculators, it's not just to give a fixed journey for the farmer, just to, we have the data and how can we make sure that they are valorized and help everyone to get better. And so finally, and it's maybe a discussion I want to have with you, is how can we make sure that beyond carbon is much more, I would say, regulated, or having at least a framework a bit like CRCF, focusing on those type of indicators, because it will help also for the credibility of the market, to have something a bit centralized, that not one methodology, but at least one way framework that we can all relate to. But today that you have regulatory or more industrial framework like SAI, or you have also corporates having their own framework and just asking for us to give the data to make sure that they can report that correctly. And so, yeah, the goal is to build a more holistic resilience approach for the farmer without adding too much administrative burden for them. So that's it. Thank you.
Hello. My name is Anna, and I work for IECO as the carbon project developer. And here today I'm on behalf of the Live Biodiv crew, which is a live project that IECO is part of with a consortium of other members. And yeah, as an impulse, I want to bring some insights from this Live Biodiv crew project, which we are part of, where we are developing biodiversity credit projects in European wetlands. So like I said, the Live Biodiv crew project, maybe to say first, it's a, like Inga says, my colleague, is a weird animal in a live context because it's only a 2 years program. So it's very short. And we are asked to test biodiversity credits in European wetlands. And therefore the project has 4 main goals. First of all, we did an assessment and benchmarking of the existing biodiversity schemes out there to see which one works best in the European wetland context. So we identified two schemes that we are testing, which is the Vera Nature Framework and Wallacea Trust methodology. Then next, there were suitable wetland sites identified. There was a large screening of potential pilots where my colleague Inga, who is sitting in the back, was leading that from Eurosite together with ILO. And then my part for IECO, we are working on actually testing then the application of these selected biodiversity schemes on the pilot sites. And in the end, there's also a piece where we're testing the market appetite for these projects, so who's actually buying or who would be interested in buying these biodiversity credits. And right now in the project, so we have selected the biodiversity schemes that we're testing. We have our pilot sites and the pipeline of other projects. And now we are actually starting the development under the schemes. And this is what we are doing with IECO. So, and I just wanted to bring you one pilot site to make it a bit more tangible maybe. It's called Janmarupe Bog Woodland. It's in Latvia, and it's a fairly large project of almost 1,800 hectares. So it's a bog woodland. It has been cultivated for forestry. There's also some smaller parts where there was peat extraction before. And we're now planning the restoration of this site with the help of biodiversity credits. And we selected the Wallacea Trust methodology for this site. And we're going to register the project under the Renew registry. And what we are doing right now is we are actually planning for the baseline monitoring of this project. So we're designing the monitoring approach. So which metrics do we choose? What do we collect? There's several expected restoration outcomes. I can run you through quickly. I mean, there's a large biodiversity component, of course. So we are expecting increased species abundance, improved habitat structure, and general greater connectivity of the bog habitat. Re-wetting a bog woodland has also a great impact on the preservation of the peat soils, potentially even new accumulation. There's greenhouse gas emissions which are reduced. Of course, local cooling as well. And then there's also the water part, so we will stabilize water levels. There will be improvement in groundwater quality. And there's also a social component to it. So there's some people living close to it that used to go for walks and recreational purposes into that bog woodland. But then how do we measure these outcomes, right? So we are now at designing the monitoring metrics to do so. And for me, this was new. I'm new to the biodiversity world, and I thought it's interesting also to share with you. So the Wallacea Trust methodology, they asked us there's also this basket of metrics that we are designing. There's non-structural metrics and structural metrics. And what we're now selecting, and we're going to pre-approve it under the methodology, is that we are monitoring for vascular plants, for mosses, for dragonflies, for amphibia. And then there is the structural component where we're looking at sphagnum moss coverage, canopy cover, and water table depth. And maybe to also fuel our discussion later, so far in this live biodiversity Biodiv crew project, our learnings were that if you want to develop a biodiversity project in Europe, the scale matters. And that is very challenging in the scattered European landscape. So there's surely a great challenge. We can also only recommend to engage with the selected biodiversity scheme early, because there might be some additional standard-specific requirements popping up, and it will delay your whole process. And then as for like developing a nature project, there's also the transparency of costs missing. So we are relying heavily on best guess to do like some kind of financial modeling to understand, okay, like what prices would we need to obtain to actually make this project economically feasible. And in Europe, we also have few comparable sites. So the biodiversity world spans off from the global south some large projects, and they are hardly comparable to the European context. And I think for the discussion, one thing we keep hearing is if you can do carbon, go with carbon, and forget about biodiversity, put it on top as co-benefits. I think everybody is telling that. I would be interested to discuss this with you, whether this is actually true, whether this is the only way we can go to unlock finance for biodiversity projects, or whether we should actually try to push for building a proper nature credit market in the EU. So, yeah, that's it. Thanks.
Good morning, everyone. I'm Simona Bosco from the Joint Research Center, that is the research DG in the European Commission. And today I will present some results of our work on the systematic review of meta-analysis, integrating the different impact of farming practices. So, as a unit in the JRC, we work quite a lot on the common agricultural policy. And indeed, we were asked by DG Agricultura to support them in the evaluation of the current CAP with an ex-ante evaluation on the ambition on environment and climate. To do that, we developed a methodology that is based on a systematic review of meta-analysis to assess the impact of the different farming practices. Just to tell you, in case you don't know, a meta-analysis is a type of a scientific paper that collects evidence from several, even 100 single studies, and then combine them with a statistical analysis. So to do that, we worked on several different farming practices without any limit on the different impact, and we have screened more than 7,000 meta-analyses. We then selected more than 600. We extracted the data, we produced the fichier with this information that were stored in a wiki that now is not there anymore, but will be another platform soon. And with that data, we published a public data set with all the information collected. And we also built a farming practice evidence library that is a public website that you can go there and navigate and use the dashboard and extract the data that you may be interested. All this information is organized in like 10 groups of different farming practice, but including many, many other sub-practices, so it's much more detailed, and the same is true for the different outcomes. We were including outcomes on environment, several different impact on soil, water, air, biodiversity, on climate, but also on production, both for crop and for livestock. And all this information is publicly available, and we will soon release a second version of this data set, including quantitative data, so not only the direction of the effect of a practice compared to a conventional one, but also the size of this effect. So a metric that helps you also to understand how much is the effect, not only if it is positive, no effect or negative. And this work has been already used in several other studies, especially the one for modelers, both on different type process-based model, but also LCA, and also to support the policy, in order to be able to understand which are the farming practices that contribute to the different impact. Indeed, I put here just a small selection of some impact, in particular the one on climate, water, biodiversity, and all the three together, just to see that we are selecting here the one with the positive effect on this impact. And this is why many practices, obviously, as you know, may deliver multiple benefits beyond carbon. And, but to do that, an integrated assessment is needed with the same methodology and a standardized, harmonized methodology in a way to be able to capture the synergies between the impact, but also the eventual trade-off. And indeed, with this evidence library, I think we can support the DNFH-aligned carbon farming in a way to be able to select only the farming practice that are also a co-benefit, at least for biodiversity. And can be even more complex when then we move from impacts to different metrics. Indeed, as you know, while for the climate metric, even if we can have several different metrics, in a way we have an harmonized one with the tons of CO2 equivalent. For the biodiversity metrics, it's even more difficult because you can also aggregate them in a many different ways with the function, the taxa. And you can see, for example, in that example on grazing, that while the main contribution on the climate metric is more on carbon in soil and maybe on nitrous oxide, it can contribute on several different metrics on biodiversity that then you need to assess or to measure. It can be also a problem to have a baseline for the different metrics. I think, no, I still have this one. So the big question is that starting from climate, if we can use the same approach also for the nature credits, considering that we know already that there are some basic differences. And for example, carbon credit rely on a single standard metric that is already well known, while nature outcomes are multidimensional, local, context-specific, and also difficult to express in one harmonized metric. And the same problem is also for the baseline and also for the monitoring that can be harder to harmonize and also expensive. And also it's important to consider the time dimension that is present obviously also in the carbon credits, but it can also be different for type of outcome. And we should avoid to oversimplifying the ecological complexity overall. With that, I've done. Thank you.
Thank you. I'm Gianluca Bagnara. I represent Cacolon, that is a farm, super farm. We are located in Italy, just 200 kilometers south of here in the Emilia-Romagna region. It's a farm with in organic, about 40 hectares, and so our first economic target is revenue. While we are certified organic, but 7, 8 years ago we started to deal with the soil issue. We entered in some EU project, LIFE, and now Horizon, and so on, to improve the soil fertility. Why? That's the main reason. In the world scenario, the total factor productivity in agriculture is slowing down. In Italy, it's even worse. So you can see we had an increasing from the 80 to a few years ago, 15 years ago, in total factor productivity, but now we have a reduction, minus 1% per year. That means if we put more water, more fertilizer, more pesticide, more or everything we want, we get minus 1% per year. So that is the main reason. And this slope is speeding down every year. And we need to reverse this situation. And the main reason, well, you know, climate change is impacting a lot, and the soils are poor, dead, completely dead. So we don't have a security net to support our production. That is a national statistic. And so that's why we start to a different approach, first in organic, but organic is not enough. So not just change the way to protect the plant, but change the way to support the grow our crops in vegetables. So starting from the territory, agriculture, processing, and so on, adopting an integrated approach of value chain up to the final retailers in order to transfer the values, also the environmental values of our production down to the consumer. This is a matrix explaining the protocol we adopt. requirement from the soil, soil parameter to keep under attention, and our agronomic practices. Simply adopting a very strong crop rotation, including also green manures, cover the soil with bioplastics, drip irrigation, and so on. So preserve, first step is preserve, manage to preserve the soil as much as possible. Our tractors are satellite control in order to have a precision management in the field, and the water management is controlled by a computer, and so everything is controlled. Now we have to think about how to convert this issue in value. We start to collaborate with FAO. We are members of the Global Soil Partnership of FAO and NetSob, Networking of Soil Biodiversity. And so we start to think about how to combine carbon issue in the soil, so carbon credits, and biodiversity credits of the soil. In order, well, the main target is how to mainstream the value of biodiversity of the soil into the value of carbon, since in carbon we have a market. In biodiversity is not clear, still not clear the markets, potential market we have in terms of good. And so the vision is to, the research and the study we are running in the team of FAO is to mainstream soil microbiome, combining the value, economic value of soil microbiome into the value of carbon credits. That means, in other words, we have one coin and two faces, of course. One is soil organic carbon, the other part is soil microbiome. The value is more or less 50-50 in a biological issue. And we have to convert. Another variable we take under consideration is this system is not stable at all. Is quite is a biological system, a living system, so we have to keep under attention the ratio carbon and nitrogen. That means the process or mineralization or the process of stabilization of the living part in the soil we have. This is the target of Horizon project. We are pilot farm of this Horizon project. Is Naturscope, started a few months ago, to estimate the flow, the fluxes of nitrogen and the relationship with carbon impact on the stability of carbon inside the soil. That is our economic, biological, agronomic coin. We have to convert into market. Economic market is natural credits combining carbon credit and biodiversity credit. So, same coin, two faces. In carbon we have some markets. It's a chaos right now since we have the bulk of the market is avoidance credit, not removal credit right now with low value. And in the current market, credits is a good, tradable good, but it's not transparent at all. I'm talking about in the world scenario. So natural credits is given by the change in the carbon, organic carbon, combining with the change in the biodiversity index. That could be a tradable good. But what happened, what is going on right now in the economic financial market? The economic market is less and less tangible and more intangible. I mean, just to give you figures, about 60% of the current financial flow are out of bank. That means new non-bank institutions are entering the market more and more, and the official financial institutions are less and less in the market. This is data of the European Central Bank. The next step, not future step, today's step, is the process of the disintermediation of financial institution and citizen. Digital euro, we started last month to enter in the process of experimentation of digital euro, is a process to reduce the distance between the central bank and citizen. So less institution in the middle. The market of digital coin needs a new figure that is how to connect digital currency with something that is tangible. So since we don't have accredited institution in the middle between central and citizen to guarantee the real value of the currency must be linked in some way to something that is tangible, that is a stable coin. 50 years more, right after the Second World War, the dollars was linked to a basket of raw material to guarantee the value of the currency. After that, the Bretton Woods with this system was broken to allow currency to be printed, there were more currency, so to create inflation. This new market of the tangible coin, stable coins called, need a new raw material, but all the main raw material now in the world are under monopolistic situation. I'm talking about the gold, oil, rare earth, any kind of raw material are controlled. What kind of new raw material we have that are free in the market, not inflationate at all? CO2 and biodiversity. These are new raw material we can deal with. And so now we are managing to use, to connect this kind of credits, the coins, combining with the two aspects, biological, ecological aspects, into this process of, as a value chain, agri-food value chain, we have many of these instruments already in place. When we talk about natural ecosystem, production of services, natural capital, economic enhancement of nature, environmental markets is already played. When we talk about blockchain tokenization, that is a strange thing. I don't know what does it work from an IIT point of view, but in the agri-food system, we have full traceability of everything. And so we need just to adapt the tool we have already in place in the agri-food value chain through the current certification process, organic, global gap, IFS we already have, adapt them to the stable digit market. And so from real assets to blockchain, we already are here. And just to adapt to the digital token to enter, to work as not as a real tradable good, but to work as collaterals of a financial market. That is a new role of the natural capital we have in the value chain. Thank you.
Thank you. Oh, electricity, sorry. Good morning to you all. Thanks for coming. Thanks, Gianluca, for this interesting and inspiring talk. It's like talking about Star Wars, in my opinion. When you speak about all these financial markets, and we are a small NGO, we work in Spain, in Fundación Global Natura, and we work with
We already are in this process.
Yeah, no, I know,
and we don't realize.
I know, we are there, but I would like to understand it better because I cannot understand something so much. And that's our problem, that we should understand it better. Yeah,
That's a problem, it's very difficult.
I'm not against it, but just thinking that it's so difficult.
No, I'm against it because it's dangerous work.
Yeah, it's dangerous, yeah. Anyway, we work in biodiversity, we work in wetlands, and we work in agrarian landscapes. And in this session, I want to introduce what we have done in wetlands and climate change in the last year. And exactly one study case we are developing in a coastal wetland in Valencia. So this is a pilot project we are doing in Valencia, in the coastal wetland, where we have the Marjal de los Moros, is the name of the wetland, and we have 300 hectares of coastal wetland, and we are restoring and managing 75 hectares of that wetland in the next 10 years. We began in 2025, and it's an European protected area. We have habitats of community interest, and of course we have been working there for many years, so we have land stewardship agreements with farmers and with shepherds and so on, and we have the regional authorities agreement and the municipalities legal security to work on there. So we built a very robust scientific MRV system for monitoring, reporting and verifying greenhouse gases emissions reduction through the restoration of Mediterranean wetlands through a live project, Live Wetlands for Climate, are finished in 2023. And we made a methodology to making work in 10 pilot wetlands around Spain. We were working together with University of Valencia, and they were developing this MRV system with very high integrity because it must be direct measure on field after whatever action we do, the measure baseline and the measure after the actions. So we developed the methodology with the CRCF logic, and it's ecosystem specific, and well, I'm not gonna go inside it because there is a lot of information you can find it all in our website and all the results we had. So what we really know is that, and we have scientific robust papers behind, is that Mediterranean wetlands, if they are in a bad state of conservation, they are net emitters because they used to be eutrophicated. And if they are in a good state of conservation, they mitigate climate change for sure, and there is a big amount of possibility to mitigate that. But restore the wetland is very expensive, and measure it is very expensive too, because we don't have so much scientific research behind to have proxies. So we need to go to the field and measure on site until now. And even more, which is our bottleneck in this pilot case, we have a high execution cost, 640,000 euros. We know we are going to avoid 1,380 tons of CO2 during the next 10 years after the buffer, 10% buffer retire and so on. So our cost of the ton is so high. By now it's 460 euros. We are out of the market, of course, and we know it. We are trying to do it more efficient. We are thinking about it, do it at a bigger scale in more wetlands, but then what happens that we didn't get into one standard to get approved. We are talking with our Ministry of Ecological Transition, and they promised us during the last 3 years that they will approve our methodology, but we don't have it already. But they said they will do it. I have an email from them of the last week promising me again. We are trying to go to a private standard to approve it, and we are talking again with them because we have companies. We have already financed the first 3 years of the project through private companies interested on this. But well, we are in the pathway to see what to do next, because we are restoring wetlands in Spain. We are restoring a lot of wetlands, not only this. We have a lot of live projects. We have private finance to restore wetlands. We are compensating water footprint of big private companies to restore wetlands. So what we want to do to take action, and we need other frameworks to help us, because we cannot measure everything and know everything. So, but we need action. We need to restore. Mediterranean wetlands are very degraded. 50% have disappeared, and we need to take action. And there is a lot of potential there to restore. So we are exploring in a different pathway. But it takes time, as we all know. We have this carbon market coming from the last decade, and we still are not sure in some cases how to apply it. But so we think we're going ahead, and we are trying to see if we have 1 hectare of a wetland where we are restoring, what's going on there. We know we have carbon there, and it's the first market that exists, so we are going ahead with this methodology of wetlands for climate. We have water footprint too, because we have water positive outcomes, and we are trying to develop a new methodology together with other water companies back in Spain. We are in the way of that. We know we have risk reduction, because in wetlands, restoring wetlands make us more resilient to droughts, and we have a good example of what happened last 10 years in Valencia. We have biodiversity. We have early work on biodiversity, and we are trying to measure biodiversity net gain, but it's difficult to have all the frameworks at the same time. And we know we have social benefits. So we are exploring that pathway, and yes, we have now a question for the debate. There is like, yes, should we go to the carbon market and then include co-benefits, but in the case of wetlands, it's so expensive. European wetlands are small, as Anna told us, and we need larger scales for this kind of carbon markets. So, but we know we have biodiversity into there, we know we have water. Should we go to claims? Which evidence do markets need to invest in this kind of projects? But what we really know is that we need to restore the wetlands, so we need to attract private finance. So should we stack only on carbon and co-benefits, or should we go to a nature credit? I don't have the answer, but maybe it's something for the debate.
Thanks, everybody. I'm not sure I'm going to add anything new now, with you guys having been before me. But first, just to quickly introduce Nattergal. We are a nature restoration business. We're founded in the UK. And again, over the last few days, I think, coming into Europe and the EU, my perception of the last couple of days has been it's either farming or it's forestry. This is the first time we've spoken about wetlands today. So it's either farming, forestry, or maybe wetlands. And so my question is, what about wilderness? What about functioning ecosystems? What about, forestry is planting, it's creating timber, carbon on the top. Farming is creating food, carbon on the top. And so this conversation about wetlands is amazing, but from where Nattergal come from, we're thinking about nature. We're biodiversity first, and carbon is the co-benefit. Biodiversity is not the co-benefit, carbon is, but it is a critical tool to enable that restoration. And so we are trying to fill the funding gap between what we need to spend and what we need to raise into nature to halt biodiversity decline. And if we do that, then we'll also be addressing the climate crisis as well. At the moment, we raised about £50 million a couple of years ago, which has enabled us to buy 3 nature restoration sites in the UK. This one is 200 hectares, this one is a 300 hectare peatland, wetland restoration, and this one is 620 hectares. And so we've bought them with our investors' money. We're a business, not a foundation or an NGO. And we are going to return a return on that investment for our investors through selling ecosystem services. And that might be carbon, that might be biodiversity, that might be water benefits, it might be social benefits. We don't know exactly what the right tool is, but we're going to keep pushing until we find a way to fund nature recovery financially viable, in a financially viable way. So I guess I made the point already that carbon is the co-benefit. But here is our Fen wetland site in Norfolk. Oh, it's gone too fast. Let me go back. And this was the, before I click on it, I'll explain because it'll jump forward. It's a 300 hectare site on about 3 meters of peat. And to avoid these emissions and restore biodiversity, we want that water table back to a natural level. And so when we bought the site, it gets wet every winter, but because of all the drainage that has happened across the UK, and in particular in this region, the Fens, every March it dries out. All that water disappears, the bird life disappears, and we go back to farming it. And so our challenge is to keep the water on the site at a natural level. And the first image was March, before our restoration activity, and then, as you can see, it's March this year. All of this water is now sitting on the site, and if you were to go there today, the amount of bird life you would see is extraordinary. But really the impact of that isn't just about the nature, it's about the carbon benefit as well. So we are selling peatland carbon there as the way to fund that nature recovery on half of the site, and on the other side, we're selling biodiversity net gain. Now, we're really fortunate in England because we have a regulated biodiversity market. People have to buy biodiversity if they are developing on any greenfield or brownfield land now. It's the law. And so whilst we're talking about biodiversity here as a co-benefit, it's really difficult to get people to spend money on it because they don't have to. It's quite difficult to get them to spend money on carbon because they don't have to. These voluntary markets, they need demand drivers. And so in England, we are really fortunate that there is a regulated market now for biodiversity. And it's just the starting point, and it's quite small, and it's going to do little bits here and there, but it is hopefully a precedent that maybe the EU, or certainly EU member countries, will think, if we want to comply with our nature law commitments, then we're going to have to regulate some demand for biodiversity offsetting. Otherwise, these markets are quite slow to move, and they don't pay well enough, as we've heard already. I think it's important when we think about carbon. So this is a project I worked on before. It's 25 years into restoration. You can see the anaerobic clay soils on the arable at baseline. This is about 15 years in, and this is about 25 years in. And that transition, all of that wonderful carbon that anyone who knows soils, you can see on the right-hand side of that image, is sequestering. And that transition is a naturally colonizing regeneration project. So it's not about food in this context, it's about creating a biodiversity hotspot, a wilderness that can support the food-producing landscape around. But it's with that transition that the soil carbon goes, and that's why I call it the co-benefit rather than the biodiversity. So how do we measure all of these core benefits? The answer is by spending lots of money. It's really expensive, but the way we use carbon on our projects, if you can't sell biodiversity as a voluntary biodiversity credit, going back to Anna's point, she's being told if you can do carbon, forget biodiversity. Well, that's our experience as well. There is no voluntary biodiversity market. So we're all working really hard to make voluntary biodiversity credits, but if no one's going to buy them, what's the point? But there is a market for carbon. And so what we are doing is pricing core benefits into the price of a ton of CO2 equivalent. So last year, I don't know if it's the next slide, we sold £1 million of carbon at £100 a ton, so it was 10,000 tons. To a big engineering company called Arup, which many of you will know because they're across Europe. We also sold at €120 a ton to Naturalis, the Natural History Museum from the Netherlands. And so these prices are, fivefold, sixfold, sevenfold higher than normal voluntary market prices, not because the carbon is any different, it's the same CO2 equivalent, but because we are evidencing using third-party verification, but we are evidencing these co-benefits. So we're measuring habitats, soils, flora, fauna, water benefits, community benefits. We work with universities, and it's this evidence that encourages those businesses, along with the third-party verification, to actually pay the premium. So we are still selling biodiversity, but it's hidden in the cloak of a carbon credit. I won't go into detail because it's probably gone on too long already, but this is how we're actually measuring the carbon benefits on the site. So we're aligned with various schemes. Woodland Carbon Code is UK, the Peatland Carbon Code is also UK, Wilder Carbon is also UK, but they are nationally recognized ICRO or ICVCM standards. We're validated by the Soil Association. You have 2 individual third parties. But then beyond that, at NatGal, we feel like we need to do the next step. So we've got flux towers on our peatland sites. We work with Forest Research, the national research body, on our woodland sites. And AgriCarbon, many of you will know, We were one of their first big clients before they became famous. And so we use all of these different methods to kind of verify the carbon as well as the biodiversity. Final slide, I hope. Yeah, so who's going to buy it? I mentioned Arup and Naturalis already. They're not just buying CO2. They are buying the ability to bring their teams out to the sites to see and work on the projects. They're buying data, they're buying evidence around social benefits, they're buying data and evidence around biodiversity benefits. And that's so important when we talk about core benefits, because whether you're trying to address climate crisis, or you're trying to address the biodiversity crisis, or you're trying to engage people back in nature, the health crisis, you have to be able to evidence it, because with that evidence you will get the price which actually begins to move the dial a little bit. I think that's me for now. So I remember to use the mic. So we have each of the panelists prepared a question to stimulate the conversation. I'm just going to get rid of that. So, oh, it's the last slide. Okay. But it would be really nice to hear from the audience first before we go into our own thoughts and our own kind of questions. And I just wondered, is there anyone who's got any questions for the panelists or wants to open up a question at all? Okay, a few. This is the first hand.
Hi, Matthias Kunert from University of Aberdeen. I was mainly to remain, but maybe it affects the others as well. I was wondering, you integrate all the different topics together, but obviously you have different approaches, doesn't matter if modeling or measurement, they have different qualities. So how do you deal with this? Because some data are some indicators or data you use for developing indicators are much more accurate, less uncertainty, others are only indicating the potential or based on selection of measurements and don't capture the entire picture. So I see the risk of aggregating it together and losing information and mixing up data of different quality. How do you see this, or how you deal with this? Is this considered? Quite simple. Certain things you can measure on a point and or model more accurate than others. Biodiversity, the question is, do you go for soil biodiversity, plants, whatever? You cannot capture everything. You have certain indicators. Some schemes only capture the potential rather than the real value. It's also a spatial question. You have different aspects about scale, about other aspects, and you need to integrate this. And I saw especially Romain integrated these values. And I just see that if you integrate this to one value, then you mix up data of different quality. And I was wondering if this is hiding something. Do you have thinking about weighting? I think it's better to, you also show it individually, so if you can, the people have a choice, so I don't blame it. But just for me, it was the question, if you were thinking about this, if you have solution or thoughts in which direction you want to develop this.
So I guess in short, how do you choose the metrics that you measure? How do you define their integrity, and how do you measure them against each other?
Yes, so clearly quality is a big question. What we are trying to do is, or at least our motto, or more my motto is that there are plenty of data out there and existing science out there that is already good enough to start. Of course, we or other project developers are not perfect. The goal here, the main goal is to how we can stack revenue for farmers and make sure the transition is happening. And so a bit like the Naturalis approach, even if we are using completely different measurement techniques and more measure on their side, more modeling on our side, it's the goal is to, in the end, make sure that the ton of carbon is sold at a higher price. And so I think today there are many different approaches out there, many different quality. what is interesting is that they are out there, they are existing, and there is a role of us out there and EU to say, okay, plenty of approach, how can we harmonize that in the future? So clearly, I will not speak, I don't think it's a question of quality, I think it's a question of consistency. We need to have a more harmonized approach in the future and learn by all the initiatives that are existing out there, and 6 of them have been presented today. But what is important, I think, is, yeah, perfect is, there is no perfect approach. And with the data that we have and the science that is existing out there, we already have the tools to move in the right direction. And by moving in the right direction and allowing EU or whatever, whoever wants to harmonize that, we will increase quality in the future and continuously improve it. I don't know if I answer totally to your question, but we can discuss after if you want. But clearly, modeling is not perfect, but at least it brings the system and resilience in some kind of the right direction. And let's discuss scientists, modelers, policy to harmonize that in the future and make sure that the quality is rising together.
Yeah, and I don't think anyone's claiming to be perfect. And if you're transparent with your approach, then we're all open to criticism, whether that's from academics or colleagues. You know, everyone's just trying their hardest to do their best at this point, but including third parties to verify, including universities, you know, being at events like this, then that is a way to mitigate for perceived flaws or imperfections.
Gerard Durasinski, professor of peatland science from Germany, and we had wetlands yesterday already, so so it's not the first time, but I'm happy to have it here again and also prominently. And I just wanted to ask you, Simona, because I've seen a mismatch, because you said, yes, wetlands are so important and we deal with them and we go for them, and also like the carbon is just the co-benefit of what we do. And you had this overview of co-benefits, and peatlands were only for the climate, but not for the water and not for the biodiversity. And I was really wondering about it. And before you start, I also had a question to Gianluca, because you said about this declining agricultural yield growth, but isn't it, I'm an ecologist, a landscape ecologist, isn't it also like we can't expect ever more growth in agricultural yield? It's rather like we should maybe go for less and then have a lot of co-benefits for nature and landscape. So these 2 questions I have.
I saw this as well, so I'm interested in the answer.
No, it's true that I started collecting the different impact on top of the carbon, but for sure there was a result on the peatland restoration and conservation. And then that are a big group of sub-practice, but there are many other results and also many other impact. And then it depends a lot on what we found in the literature, because the problem is, since we were working at the meta-analysis level, so already collecting single study, there are not always meta-analysis on everything, on any impact. And for example, usually biodiversity is really one with a lack of results. We have some data. Good, good to know.
Yeah, it's true. We are losing production in agriculture right now, even though the world demand is increasing, but the agriculture system is no longer in the position to support the growth. My explanation, very simple explanation, is that we lost most of the diversification of the ecosystem around the agricultural production. Agriculture is no longer part of an ecosystem. It's just, it's no longer planned according to the value of the land. I am a land economist, and so agriculture was a piece of the land system. Now agriculture is planned according to the value of machinery, to the depreciation. We need to depreciate to support the amortizations of machinery, and so we are planning agriculture in this way to combine the economy, not to, according to the value of our land or our ecosystem. The final result, we are not stabilizing the production, we are decreasing the total factor of productivity. Well, of course, we don't talk about it. There is a fault of the agricultural system, especially of the representative of farmers, because it's difficult to afford from a political point of view, this kind. And so we just ask money from CAP or from other to compensate this loss. That is a main mistake. It's a dangerous, real danger for agriculture. Thank you for the question.
Go one, then two. You next.
Hi everyone, I'm Ricardo Beck from Azoya Projects. As an enterprise in Spain, a small one, that developed a methodology for regenerative credits. Didn't succeed that much, but I think that there is still room, and I'd like to see it happen here. But my question is, what are the uses that the financiers, let's call out them, can use of the information that is gathered from the projects that are beyond carbon, and in terms of compliance with their sustainability strategy, ESG, because I even saw your presentation that the carbon is a co-benefit, but at the end the unit that itself is the CO2 anyways. But just to see if we, at least in this small room, we can agree on what is actually what the other side is financing and to use for what.
Good question. Would anyone like to start with that? Or I guess there are a range of reasons. Exposure to risk as a business is a huge reason to invest in co-benefits, so that, you know, if you're at risk of flooding, or you extract water to run your factory, or you extract water to run your farm, and the landscape above you has degraded soils and no trees left, so that the water just flushes out into the sea every time it rains. Investing in nature and soils above you is about way more than just carbon. You might use carbon as the way to do that. So exposure to risk and water is obviously a key one. Drought, flood, you know, in every European country, from top to bottom, we're all exposed to this risk. So a huge thing is about business resilience now. Demand drivers, you know, I feel like the CSRD and the omnibus last year was a bit of an issue, because, you know, whether it's the nature restoration law or CSRD, it's about driving businesses to look at those risks and start mitigating for them within their supply chain or beyond value chain. And so, you know, we don't have time to go through them all, but there are a million reasons that you'd be looking to invest in those benefits, including things like food production, pollination. You know, if you don't have healthy soils, you don't have food. And if we've learned anything from Iran, energy security as well is a huge element of what we're doing. So if we're talking about land use, we need food security, energy security, biodiversity security. All of these things are driven from the land that we have at our disposal. And it's also about people, so health benefits, et cetera, et cetera. So they're the range of benefits, but how do you encourage or get businesses or buyers to connect all of those things to making a payment or making an investment? And that's the hard thing. And that's, in my view, where I think policy and regulation probably do have to play a role. Because whilst everyone's short on money at the moment and the world economy is a mess, it's very hard to convince a CFO to spend an extra few £1 million on something when they don't have to, because they're looking at next year's profit and loss rather than year 19, 20, 30, 40. And so it's that connection that we all need to collectively work on. Does anyone else have any thoughts they wanted to add?
Yeah, I like your answer. I have some more thought to put on the table, that my view, maybe I could be pessimistic, but financial markets are not in the position to read, to manage a lot of information. Financial markets they think in very narrow, with a very narrow vision. So if we integrate more information, they manage to escape from it. And that is a problem started in 1971 when, with the withdrawal from Bretton Woods agreement, that was an agreement to link economics and finance. And now from that point, every year, every decade, we have a step to separate economics and finance. Now they are completely independent. So when we talk about carbon credit, we are talking about something almost real, is a way to measure carbon stock inside the soil, and it's a kind of economic market. On the other side, financial market, they don't consider this issue. They managed to move out from official economic information and currencies. Now we are in the process of implementing state crypto value. That means completely destroy the value chain controls in the financial markets and manage to involve directly the final user, that all of us. And that is another issue, completely separate from the financial, from the credits. And so they need some collaterals to provide some way to guarantee that the stable coin as something real can be used. And so this is another issue, in my view, and we need to provide this kind of tools to this financial market. I mean, I repeat, they are completely separate from the economic side. Carbon credit or natural credits are not a good to trade, could be a collateral to support new financial system. It's my vision.
Thanks, Gianluca. Vanessa?
But it's a vision that is implemented by the institution. Just last August, Madame Lagarde, the governor of the European Central Bank, wrote to the Commission, EU institution, to inviting them to speed up in this direction. I'm talking the European Central Bank. If you go in the US, we have the process of digitalization of the dollars from fiat currency to, and so the same process. The difference is that in Europe is managed by the European Central Bank, in the US by the president by himself. That's the only difference. The same in China.
Yeah, well, in our experience and our opinion, we finance many projects with private funds, not only in wetlands, but even in farming fields and farming practices, and we are working with agri-food industries, big ones, and yes, they need outcomes, and they need outcomes monitored and verified by external assistance, not necessarily credits. They don't need to buy credits, but they need to have those outcomes and to have indicators to report under the CSRD, the directive with the ESG, environmental, social, and governance indicators. So yeah, they are about to do it. It's not something that they need to do it to report to the European Commission. Also now this CSRD is weakening under the European Commission. So we expect not too much, because we know a lot of agri-food industries that made good homework and made good work, and now they are thinking, I did it right. And now they are weakening the law, so those who did it worst are most competitive than me. So it's not fair, I think, in my opinion, and they are not very happy with that. But in any case, yeah, we need outcomes. We are regarding biodiversity. I explained it yesterday in another session called Carbon Plus Nature, but we created a framework with a basket of metrics for biodiversity to measure different indicators with different methods in farming practices, and now we are trying to translate it into wetlands. We are beginning this year We work on that for the last 10 years for farming practices, and it's ready. You can find it, the methodology, in our website if you are interested. It's biodiversity net gain calculation for agrarian landscapes. So I think it's, thanks to that, we are getting finance from agri-food industries to change farming practices, because they get biodiversity outcomes, and it's monitored and it's verified, and there is a lot of robustness behind. They need that, but they want claims, in my opinion, and not too much credits, until what I know. So we think this is a pathway. Of course, we have this carbon market evolving, but even we are listening, there is not a lot of demand, and it's difficult. I think only if the policymakers make mandatory to agri-food industries or to industries or wherever, as they do in United Kingdom, you have the biodiversity net gain code and the peatlands code and all the big infrastructures that are building something big of more than 10 million euros or something like. There is some measure. It's mandatory for them, for instance, to restore nature, to invest in natural restoration and under the biodiversity net gain. Maybe someone from the United Kingdom can clarify this. How does it work? But in Europe, if we want that these markets, natural markets or carbon markets work, we need someone to pay for it, and there is not demand. Until now, private companies work by claims, with us at least. They need claims, so they need robust indicators, measure and verify. This is our experience.
We'll do one. Remy.
Just to build on what you said about the demand, even if we see that EU Commission is working hard on building that demand through the Buyers Club, etc., the demand is already existing. You have pioneers on the market that are already looking for those co-benefits going beyond carbon. And so from our experience of the ag-food business, having SBTi targets and so looking for carbon improvement that they will claim, they are also looking, even if it's not part of their claim, they are already looking for beyond carbon metrics. And this beyond carbon, so it's not us saying, we have a beyond carbon calculator, let's give you the data. It's a requirement from them. It's, okay, I want to claim the carbon part, but let's prove me that it has other benefits than carbon. And so those pioneers in ag-food business do that for resilience of their system. That's what they are looking for. They want to make sure that they will still have supply in the future. And what's also interesting, and it's a demand that is being created for the moment, is these beyond carbon indicators can bring a demand that is not part of CRCF today. So, for example, water company that will not look at carbon credits, for example, but they need to see that in the vulnerable watershed that they have farmers that are going in the transition. Insurance banks are interested also to see that farmers are more resilient to problems. So the demand is there. We just need to build it up and stack and make sure that everyone participates in that financing. So it exists already.
Thanks, Romain. We'll do one more question, and then I'll have to ask the panel to wrap up.
Thank you, Marlene from Carbon Market Watch. Thank you very much for your contributions. I have two questions. One of them is precisely on the biodiversity net gain, because you were talking about a regulatory framework in the UK, and I assume it's that. So maybe if you could explain a bit more what it entails. And then the second question is also linked to what we were just discussing, the demand and what the use case for these credits will be. Oftentimes the use case being offsetting and just kind of the risks around that. So you could potentially enable a framework whereby you're allowing a company to destroy nature and to compensate for that by buying these credits, potentially falsely equating ecosystems and not actually taking preventative action. So what are your thoughts on the risks of offsetting? Do you think that the use case needs to be regulated? And as a credit creator, would you potentially consider introducing clauses in your contracts restricting the use case? Yeah, if you could elaborate on that.
Thanks. Just because, Vanessa, you mentioned it as well, the biodiversity net gain is England only, it's not UK-wide. And it is a piece of legislation that was introduced in the Environment Act, which is, I think, 2021, and only came live 2 Februaries ago, and it's been a slow, complicated start because we have a new government who tried to kind of dilute it a lot. But ultimately, it mandates that any development, i.e. housing development, offices, commercial, railways, any development that is being built has to offset their biodiversity impact. And it's calculated really quite simply, in some people's view too simply, but actually it works quite well, based on habitats alone. So let's say you are building 10 houses on the edge of a village, you send in the ecologists, they survey where you want to build, and you count however many meters of hedgerow, what species are in that hedgerow, what condition it's in, you look at the grassland or the arable, you look at the trees, you look at the floodplain, and each of those habitats has a value assigned to it through something called the DEFRA metric. And so high-value habitats like a floodplain or an ancient woodland or a big, beautiful, ancient, open-grown tree, they have a very high value, whereas low-value habitats like modified grassland and arable have a low value. And so you then do your plan. This is where I'm going to put my 10 houses, and I'm going to plant a few trees and do a little meadow on the side and dig a pond. And you have to demonstrate a 10% gain in biodiversity, a minimum of 10%. And so with the on-site measures you've done, you might get to, I don't know, half of that. And then you look off-site for mitigation. And that's where someone like NASCAR will come in. We're an off-site net gain provider, so we create the units. And the way the metric works, it financially incentivizes developments to stay local. So the closer you are to the development, the fewer units you need, the cheaper it is. And so the theory is most of your mitigation happens on the site, and then anything you can't do on the site is done relatively locally. But it's a free market technically, and so because it's so new, everyone's playing around with pricing, and there are lots of kind of innovations going on at the moment. But what it does mean is that we, as a nature restoration business, have been able to go ahead with those 3 projects because we know there is an amount of demand for our biodiversity units. Not nearly enough to pay for 600 hectares, but over the next 10, 15 years, we expect to pay for at least 200 or 300 hectares through selling BNG, and the other half is going to be through carbon or water or social value. So we have a kind of blended system of which BNG is the kind of dependable central part of the model, and carbon is a little bit more variable whilst we innovate on other things. But yeah, it's amazing. And most people within the nature world are really proud of it, but because the government is so focused on growth and building, they've obviously tried to dilute it to enable more growth and go ahead. So that was BNG. What was the second question? Oh, about demand and selling to off-takers. Anna, do you want to think about this?
Yes, thanks for the question. I totally agree that the claims should be regulated in some way. I think for us, from a project developer perspective, and the whole Article 6 Paris Agreement discussions, there is already now the differentiation between corresponding adjustment and contribution claims. So for us, as a project developer, having actual credits and selling them to corporates, we check what they use it for, but this is like a regulation, like we regulate this ourselves. I think this should be actually something on a more higher level thing, right? And since you are, like, if you do not go into like large discussions with the government to get the authorization to have a corresponding adjustment, then you can only sell contribution claims, which is not an offset. It's just a contribution. I'm not sure how, how project developers are handling that on a larger scale. So it needs awareness for sure, and I agree that it should be regulated.
The peatland code, which we use for our peatland carbon, within the scheme defines what buyers are allowed to say or how they're allowed to use the credits. So they can't make claims of net zero or carbon neutral. They can just say we've invested in nature and it's delivered this benefit for carbon. So some of the standards, it's down to them to define what off-takers are allowed to say, which mitigates for that a little bit. In the UK, we have something called the Nature Markets Framework, or Nature Market Principles, which defines how you choose, well, defines a lot of things, but one of them is about buyers. And obviously you don't need to sign up to it, but if you're high integrity, which we believe we are, the moment you sell to a bad actor completely undermines that, and any hope of getting a good value for your carbon will go down the drain. And so it's super important to us, both because of an ethical perspective, but a commercial perspective as well. If we undermine our integrity, then that's our whole kind of proposition gone. And so we use those nature market principles. We lean on the standards. So Wilder Carbon are the one that Arup bought the credits from us. They also have rules and kind of claim definitions. And so I think, in my view, the standards that you're working with, they have a large part to play within kind of shaping the high integrity market as well.
I wanted only to add something on the European level that is not my topic, so I'm not the most updated person, but last summer in July it was launched a roadmap for nature credit. So the process started, and I know they are working with a working group, with pilot, so case studies, but it's just started. So, and the idea that I know is to try to learn from all the process of the carbon credit and to try to better understand how to at least apply what was learned, the good example. But then it's a process that needs time, I guess, especially to develop the methodology.
This point is very important. Other 2 points, in order to organize a framework around it. The white paper of FAO about economic evaluation of soil biodiversity is at the end of the revision, so it's going to be published soon, to present a kind of theoretical framework about mainstreaming biodiversity into the merge biodiversity and carbon evaluation. Second, is important, the Commission opened recently a revision or collection of opinion to prepare a revision of the financial taxonomy, that is the regulation of the financial market. The main issue, the two main issues are climate adaptation and also biodiversity is inside this taxonomy, the regulation. So it's important to provide contribution, not just from financial people, but also from the community, a scientist, the community that is dealing with the natural capital. So please Google and provide your contribution in order to address the financial market to match this capital. Thank you.
Thanks, Gianluca. And so I guess that's just thank you, everybody, very much for coming to listen to us, and obviously to the panel for talking. I think we'll probably hang around at the front here for a few minutes, so if you want to come and chat to us, please do. Thanks so much.